Hey folks! Welcome back to another episode of the Daily Forex Pulse, your go-to podcast where we break down everything that moved the currency markets today and what you need to watch tomorrow before you hit those buy or sell buttons. Today's date is Wednesday, March 26, 2025, and let me tell you, it's been a wild day in the Forex world. Whether you're scalping pips or holding swing trades, today's price action probably kept you glued to the charts. So, let's get right into it. I'll break down what happened today, the major headlines that shook the markets, key technical levels, and most importantly, what to expect for Thursday, March 27, 2025. Fire today's Forex recap, March 26, 2025. Starting with the US dollar index, DXY. The dollar stayed firm for most of the New York session, closing near 104.82, up about 0.3% on the day. The strength came after a batch of mixed economic data out of the US this morning. We saw February's durable goods orders beat expectations, coming in at plus 1.9% versus the forecasted plus 0.8%. That gave the dollar a solid intraday boost. On the flip side, we also got the latest pending home sales report, which missed expectations, showing a 0.5% decline month-over-month. That news initially capped the dollar rally but wasn't enough to reverse the overall bullish momentum. Euro to US dollar. The euro struggled today, closing around 1.0805, down nearly 50 pips. The pair slipped after ECB board member Isabel Schnabel gave a speech suggesting rate cuts may start as soon as June 2025, depending on how Eurozone inflation evolves. That was all traders needed to push euro to US dollar lower. Pound sterling to US dollar. The British pound couldn't catch a break either. It dropped below 1.2600, closing at 1.2583 after the UK CPI data came in slightly softer than expected. Year-on-year inflation hit 3.2%, down from 3.5% in January. That gave traders more reason to bet on a potential Bank of England rate cut before the summer. US dollar to Japanese yen. The yen continued to weaken, with US dollar to Japanese yen breaking above 151.50 intraday, before pulling back slightly to close near 151.20. Markets are still digesting the Bank of Japan's historic rate hike last week, but today's price action shows investors are more focused on widening yield differentials, especially with US yields holding firm. Australian dollar to US dollar and NZD/USD, both commodity pairs followed risk sentiment today. Australian dollar to US dollar dipped back below 0.6550 while NZD/USD slid under 0.6050. Weak demand out of China and falling copper prices weighed heavily on both. Gold and oil impact. Gold slipped lower, closing near $2,185 per ounce, mainly on the back of a stronger dollar and higher treasury yields. Oil prices were choppy but finished slightly higher around $81.40 per barrel, supported by ongoing tensions in the Middle East and declining U.S. crude inventories. Forex market forecast, March 27, 2025. Alright, now let's look ahead to tomorrow's trading session. Here's what you need to keep an eye on. Key economic data scheduled for March 27, U.S. final GDP. Q4 2024 expected at 3.2% annualized growth. Any surprise here could jolt the dollar pairs. Weekly U.S. jobless claims. Traders will look for signs of cooling in the labor market. Eurozone consumer confidence. Final could trigger fresh volatility in euro crosses. BOE Governor Andrew Bailey speech. This will be a big one for pound traders. He may give clues on how soon rate cuts are coming. Technical outlook. Euro to US dollar. The pair broke key support at 1.0830 today. If tomorrow's GDP data beats expectations, we could see a retest of the 1.0750 zone. On the upside, resistance sits at 1.0865. Pound sterling to US dollar. With soft inflation numbers weighing on the pound, all eyes will be on Governor Bailey's speech. If he hints at rate cuts, expect a break below 1.2550. If he leans hawkish, a bounce back to 1.2630 is on the cards. US dollar to Japanese yen, the pair looks ready to test 152.00, a psychological level that could trigger intervention threats from Japan. However, as long as US yields remain strong, bulls will likely stay in control. Australian dollar to US dollar and NZD/USD, these pairs will stay sensitive to risk sentiment and Chinese economic headlines. Unless we get a surprise GDP print from the US, they'll likely trade sideways to lower. My personal trading game plan for tomorrow. Here's how I'm setting up for Thursday. I'll be watching euro to US dollar for potential short setups if we get stronger US data. I'll keep a close eye on US dollar to Japanese yen around the 152.00 level. If we see a spike with no follow-through, I might look to fade that move. For the pound, I'm staying flat until after Bailey speaks. No reason to gamble ahead of potential policy signals. Gold is looking heavy here. I'm looking for a possible breakdown below $2,175 for a short scalp. Risk management reminder, no matter how strong a setup looks, never over-leverage. We're in a headline-driven market right now. One unexpected comment from a central banker or geopolitical headline can flip the script in seconds. To sum it up, today was all about the dollar holding its ground while risk currencies took a hit. Tomorrow will be about data confirmation. If US GDP and labor numbers continue to surprise to the upside, the dollar rally may have more legs. If you're trading tomorrow, stay disciplined, follow your plan, and don't let the noise shake you out. That's a wrap for today's episode of the Daily Forex Pulse. If you found this episode helpful, make sure you follow the podcast, leave a rating, and share it with your fellow traders. And don't forget, I'll be back tomorrow night with a full breakdown of how the markets moved and what to expect heading into Friday. Until then, trade smart, trade safe, and I'll catch you on the next episode.